Ladies and gentlemen, serious brothers, Andrew, Philip, we are here to ask the simple question and then answer that simple question. Where is the inflation?
6 months ago is where the inflation
Maybe
is.
even before that.
Yes. So what's going on right now is everybody's saying, warning about inflation, saying,
coming.
be careful, inflation's happening. They've printed so much money.
They did print a lot of money.
Be careful, invest in gold and stuff like that. But what I keep saying and thinking, and I've been thinking this for a long time now, is inflation isn't coming. Inflation isn't a future thing or happening right now. Inflation already happened, and for some reason, everybody's pretending it didn't. I don't understand exactly what's going on, but Andrew, why don't you get into the details and the research, because you're better at that than I am.
Well, the CPI in March was at 2.6% annualized.
Which isn't that much.
2.6% interest. Now, before that, it had been in the ones, in the 1 to 1.5 more or less.
That's a modest increase.
Yeah, and I don't think that really covers it. When you start breaking it down, I mean, the CPI misses a lot of things. For example, it doesn't count housing prices. It doesn't count stock prices. It doesn't count assets. And if you look into how, they printed an enormous amount of money. I mean, the funny graph, M1, went from 4 trillion to 18.7 trillion.
That's more than a 1%
18
increase.
18 trillion. Although that a lot had to do with an accounting change. It actually went from more like 15 point. The M3, if you look at it, went from 15.4 trillion, which includes like bank certificates and things like that. Institutional cash went from 15.4 trillion to 19.7 trillion over the course of basically January of 2020 to February of 2021, which of course is a lot. That's means something close to 25-30% of the money supply was created in the last 12 months. Of every dollar in circulation, 30 cents of it was created in the last 12 months, which is a lot. But most of that money filters immediately into asset prices, because when the Federal Reserve makes money, they're either buying bonds to put cash into circulation. They're lowering the discount rate, so banks can basically lend more money, which actually creates more money. We'll put a video in here that explains that process. All of this tends to inflate asset prices.
Well, what's happening? Real estate going like crazy.
Real estate, the Case-Shiller index in 2012 was 136. 2020, even through the 2008 in 2020 was at 214. It's already 241. So it's increased it's increased 12.5% in the last year. In Kansas City, where we're at, in Jackson County, it's increased 17%, 17.3%.
Stocks are at insane PE ratios.
The Buffett rule is being exploded, which is market caps of different companies versus the GDP.
Yeah,
that's an all-time high, I believe. We had an all-time high in the Dow. The Dow Jones went from just under 30 to 19, and then hit a new high in the middle of a recession. It's at 33,000 right now, up 77% from the bottom.
Everybody
in March
knows what's going on with cryptocurrency. It's going crazy.
Dogecoin is up a lot.
Well, even Bitcoin's been going crazy.
Up a lot.
Lumber. There's memes about lumber
is
going
up
crazy.
232% since the beginning of the pandemic.
Oil started going up a bunch.
Yes, oil.
After the crash, oversupply, and it's still going up.
Gasoline went from $1.77 a year ago to $2.89 today. It is up 63%.
And the story I've been hearing for months is all of these things are going up, and real estate's doing great, and everything's hot and stuff, and it's like everything's going up in price, so everything's doing great. That's the story I've been told. That's the story I'm hearing, and I'm like, that's not what that means. What that means is your dollars don't buy as much as they used to. What is that? That is your dollar being devalued, which is inflation.
Yeah, what we're seeing is when you have an enormous amount of money printing, you're not, the amount of the money in circulation times its velocity equals the price times productivity. So when effectively velocity is how fast people are spending money. If there's a lot of unemployment, they're not spending money very fast. So you can print a ton of money and you're not going to see any inflation.
That's true.
But that's when unemployment was almost 15% back in April, that there was nobody was spending, right? Now it's down to about 6%. people are starting to spend again. It goes into the assets first because that's where most of the new money is created. Goes into buying bonds or paying which goes to institutional investors. Loans which go on real estate or business loans. So we see real estate prices, stock prices, cryptocurrency prices, all of these prices exploding. We're starting to see raw materials go up, gasoline, lumber, etc. Now lumber, there's some other issues there too.
But regardless,
but
that's
even
an
food
insane
prices,
increase.
food prices are starting to creep up. I mean, they're saying it's like 2% in the last month. But the images I'm seeing across Facebook and Twitter, my own just walking through the grocery store, it's more than that. I mean, and it's also, there's more things. People are using, like, the New York Times had an article noting this. People are using things like Instacart more often, which means that their cost is higher because they've got to add that premium on top of it. Quality and variety are both down. After the pandemic, there's less small businesses open. You have more. So you have less variety of options to choose from. People are offering less services. It's harder to dine in. And things like that. So quality is down, variety is down, all those things, and there's other premiums on top of that. And as we're, the prices of assets go up first. As velocity of money starts increasing, as people start spending, as they have jobs again, or they're getting money, from the government directly in various subsidies and things like that, the inflation. But it then trickles down, and I think we're starting to see that as it goes from assets to raw materials and then into
the only thing that
consumer goods like
the only thing that doesn't seem to be going up is like video games cost the same and stuff. But like, I realize the CPI is not a great index, and any good economist will tell you the CPI
it's a basket of consumer goods. It doesn't include asset prices. It doesn't include a lot of things. And so, given that inflation first goes into asset prices, the way that money is printed, it's going to be late and also wrong.
Well, that's the point I want to make, is the narrative is all of these assets are going up in value and everything's on fire and everything. That's not what it is. What it is inflation already happened and your dollars aren't worth as much anymore today. Not in the future they're going to be worth less.
The economy is better than it was in April of last year during the pandemic.
But that's a whole different story.
Yeah.
But
it's still pretty mediocre, 6% unemployment.
But things have not gone up in value insane amounts.
No.
Dollars don't buy as much as they used to.
They're lying to you.
Yeah, the inflation has been huge over the last however long, and for some reason, everybody's saying a different story, and I don't understand it.
Now, the question: will we see Weimar Germany, where one Reich mark ended up being worth $4.2 trillion? Probably not.
I say definitely not.
Yeah, highly unlikely. Again, there are a lot of countries that have consistent inflation. Latin American countries are infamous for having inflation rates of 10, 20, 30%. Sometimes you get Venezuela. But usually it's just high inflation. I think we are moving into a higher inflation environment, probably with lower growth, stagflationary environment similar to the 70s. But it should be noted that this, particularly for real estate investors, this does give pause to this idea that we are near a crash. We might just be seeing prices going up rapidly across the board, your dollar losing its value. There are some things that can happen. One, I do think that the increases are unsustainable. They will level off at least, maybe even a small correction or a decent correction, but not a crash. I don't think.
No, I don't think a crash will happen.
The only ways I think there's only two ways I think it could stop. The first one is it just becomes unaffordable. People can no longer buy, and I think that would lead to a correction.
Yeah,
I mean, that would slow it down to stop it.
It will slow down, but I think people are so into housing, I think they will make sacrifices to get housing over other things.
Well, there's the point where you just can't do it. You try seeing the prices.
I think people make other sacrifices.
Seeing the prices of housing.
I think those sacrifices. Yes, but I think those sacrifices will be made elsewhere.
Yeah, but even still, if that happens, housing price they can afford it now.
It won't.
It will level off. It will.
But it won't be a crash.
The only way
I not go up as fast
at this point, see, because while they are pushing LTVs down, they're being a little bit. I've heard stated income loans. Right, they're not doing the teaser rates. They're not doing the
there's legitimate demand rather than fake demand through leverage, which is a big difference.
And they're not doing quite as many of the gimmicky things to give loans. The government's not pushing that as much. Businesses, banks were burned, and people. There's still some of that, but it's not like it was in 2006 when it was rampant. What could trigger it would be something similar to what happened in the early 80s, when to stop the inflation, the Fed Volcker jacked interest rates to the roof, and that would make it extremely difficult to buy a house, to hold a house, and would cause the real estate market and the rest of the economy to go into recession, but particularly the real estate.
Which will bring all the asset prices back down to more reasonable
but that wouldn't
levels.
happen until the inflation really starts to be seen, or at least to be admitted by the government.
That's the thing. It's just not being talked about. The story is everything's going up in value rather than the story is your dollar doesn't have the value.
But no, when you print 30% of all the dollars that exist in the period of 1 year and just make it rain on everyone in the sometimes completely capricious and random fashion, prices are going to go up unless the economy is simply nuked. It was for a short while. Now we're back in this sort of mediocre state. Prices have nowhere to go. Like, prices in general have nowhere to go but up. And while real estate is extraordinarily hot, I do think it can level off here, but we are moving into an inflationary environment. In fact,
we were in an inflationary environment. We've already gone through a lot of it.
Into an inflationary
But you know what also needs to inflate?
Number of subscribers.
Yes, and the like button, that needs to inflate to this blue color because you pressed it. We have some awesome videos coming. We're going to talk about, we're going to go into detail on, is this a real estate bubble? We're going to talk about lumber memes soon. We're going to talk about, I'm going to go on a rant someday about cryptocurrency and how everybody doesn't understand fiat currency and everybody's wrong about it. I'll go on that rant someday.
You're going to get you're going to get the crypto people and
because they're all wrong.
The Austrians are going to be mad at the crypto people.
But we got some good stuff that we're gonna come out with you guys with. So hit that subscribe button, hit the like button, comment down below, and we'll see you guys soon.